In today's video, we are going to discuss the transfer of insured rider. This is a pretty cool rider. I remember the first time I learned about it, why I thought it was so cool is because I heard that professional sports teams used it, particularly when trading players. So I'm like, all right, how do sports teams use cash value life insurance products? Tell me more. This was many years ago. I was speaking with, it was a higher up underwriter at Guardian that my wife knew very well. So I was talking to him one day and he was sharing stories about how companies will use cash value life insurance, and he shared some names of professional athletes that had large policies with Guardian as well, which I will not share for confidentiality purposes. But getting on into the rider. So the transfer of insured rider, what this allows you to do, it's kind of in the name here, it allows you to transfer an existing life insurance policy to another individual. I'm going to give a specific example of this shortly as well. But for this, underwriting is required. The original policy date does not change. That is a nice feature. Keep that piece in mind right there. And this is very common among business-owned policies. Some individuals exercise this when they become aware of it. However, not that much. It's more common with businesses, whether that's small businesses or large corporations. With sports clubs, when you look at professional sports teams, if you've got a life insurance policy on a professional athlete, that professional athlete is traded to another team. The current team, if they took a policy out on his or her life, might say, okay, we don't have any more insurable interest. However, we've got this old policy. We don't want to start all over with the new startup costs of a policy. So what if we can transfer this existing policy that we had on player A, which is now with our rivals or another team, and transfer it to a new rookie? Can we do that? Yes. You can do it with corporations as well, non-athletes, and I'm going to provide detail on exactly how it works. So let's have some fun here. When it comes to the transfer of insured rider, oopsie daisy, how it works is, again, we can transfer a life insurance policy from one person to another. So let's go through it. Let's assume that you take out a policy this year. We're in 2022. That's the year of shooting this video. And your age in 2022 is 40. So you're a 40-year-old individual. You're taking out a policy, and let's pretend that you're funding it with, it doesn't really matter for this example, let's say it's $50,000 per year. Okay. And it's a high cash value policy. The goal is maximum cash value. So that's your annual funding. And let's assume that you fund the policy up until 2032, 10 years, which would technically take you to the end of 2031, but you see where I'm going here. We'll just add 10 years. 10 years from now, how old will you be? 50 years, age 50. You started the policy in 2022. That's your policy date. So let's pretend that it was November 2022. This is your policy date. So on your formal contract, you'll see an issue date, but then you'll see policy date, which is the date that the policy was started, based on your issue age of 40. So 10 years, if you funded $50,000 per year, what is that policy going to be worth from a cash value perspective? Well, at that point in time, the cash value, let's put this in green, will be more than $500,000. You've paid in $500,000. Let's say it's $580,000. Will depend on health rating and a couple factors, but you're going to have a gain there. And the death benefit will be sizable as well, depending on the product and company you selected. But cash value is $580,000. Now, let's say that we exercise this transfer of insured rider. So let's look at exercising this rider and exactly how it works. Let's pretend when you were 40 years old, you had a child back in 2022, and that child, son or daughter, was, how old should we make them? Let's say they're 10 years old at the time. You know what, let's go 15. So they were a minor. And how old are they today? If we fast forward to 2032, you're 50 years old. Now your child is how old? 25 years old. If you wanted to exercise this rider, here's what you could do. You could say, okay, I'd like to transfer this life insurance policy to my child. So the child, your 25-year-old son or daughter now, will have to go through medical underwriting. So let's do this. If they wanted to start a new policy, what would be required? They would have to go through medical underwriting. If we want to take this 10-year-old policy and put it on them, they still have to go through medical underwriting. So underwriting is required. Now let's assume that they're approved, that preferred, they're a healthy young individual. What happens here is that this policy is now on their life, and the policy is priced still based on that policy date of November 2022, which even though they're starting the policy now or we're transferring it to them at the age of 25, the policy date gives them an insurance age of 15 years old. Now you can start to see why a lot of companies will exercise this whenever they lose an employee, someone replaces them, or if they're trading a ball player. So 15 years old, so you're younger here. Obviously, that will help the cash value performance. Not a whole lot, but it will help it. So what happens then? The policy is repriced. The cash value will still be $580,000, or approximately. Everything's going to be repriced based on his starting age of 15. So the likelihood is it'll be a little bit higher, but you see where I'm going. 580. Companies will sometimes have a fee for this, so we do have to take that into consideration, but it's going to be very close to 580. Even after the fee, it might be a little bit higher because we're starting at a younger age. A death benefit will be on the policy as well. Now that will need to be repriced based on his or her age of 15 back November 2022. So it's going to be higher, likely it will be higher than what it was when you started at age 40. So the death benefit will be higher there. So for a 25-year-old, they will have to be able to be approved for that high death benefit based on their age, income, and a couple other factors. But what we've done here is now transferred the policy to our younger child, which allows us to do what? Well, we can continue to fund it. So let's say your dad at 40 years old, you want to continue to fund it at $50K per year. Can you do that? The answer is yes. Again, assuming the 25-year-old qualifies for that level of funding and that death benefit, but you can continue to fund it. You've got it on a younger individual now, and the cash value continues to compound over time. So it's a nice option to be aware of. What I'll mention though is the strategy we just described, a parent transferring the policy to their child, does not always make sense. And the reason why, think of it this way. If you have this policy, so you're the 40-year-old individual, 10 years pass by, now you're 50, you've got $580,000 in cash value, but you've also got, let's say, $2 million in death benefit. You can transfer the policy to them and it can continue to compound at a fast rate, and they'll have a nice bucket of money as the years pass and when you eventually pass. However, if you, the parent, pass, that death benefit is paid to who? Your beneficiaries, which in many cases it would be a child. So the question I would have is, does it make sense to transfer this policy to your child, or do you keep the policy on you, continue to use it, and know if and when you pass, when you die, that death benefit will eventually be passed to them? And if you said, okay, I want to make sure they use it for a policy, well, what you could do is designate a trust as the beneficiary, and in those trust documents, you have it spelled out that a percentage, or all of it, however much you want of those life insurance proceeds, that a percentage of it should be used to acquire a new policy for the child. So again, that's the kind of stuff we want to consider in this particular case, and any case for that matter. It's more common to see this transfer of insured rider used among companies, and in fact, some companies will only allow it to be added if it's a business-owned policy. For example, Guardian has this rider available, the transfer of insured rider, but it's only available if the policy is a business-owned policy, meaning if it's an individual-owned policy, it's not available. However, MassMutual does have it available to both business-owned policies and individually owned policies, which is nice. So again, one, it's having awareness of it. I forgot one important piece before the awareness is the cost. It costs nothing to attach this rider. However, if we do exercise it, there will be a fee. That's the information most companies disclose. We want to see what the exact fee is at that time before we actually do it. We can see what the fee will be, but there is a fee if we want to exercise it, which if it makes sense to exercise, let's say it's with a company where you own a company, you put a policy on a 40-year-old individual, 10 years later they leave, you still own the policy, your company does, you've got this big bucket of cash value, $580,000, and you say, man, we've got this new employee that took over this person's role, but man, I don't want to have to start over with a new policy, go through the negative hit like I took this policy out and got through the early years 10 years ago. That's where it's attractive, because now you can take that policy, transfer it to a new person, a younger individual, and you're not going through the startup costs again. So that's where it's often attractive, again, on the corporate side. So the main thing is, getting back to my earlier point, awareness. Having the awareness if it's even available on my policy or not. And then two, looking at the situation and seeing, does it make sense? Which in business owner situations, a lot of times it can. Individual situations, not all the time. But anyway, I hope you enjoyed this video. It is a neat rider to be aware of. If you have any questions, please leave them in the comments below or shoot us an email. Please hit the like button, subscribe for more. And as always, I hope this helps. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.